The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the grain and oilseed trade, for the most part, found a little bit more selling pressure on Friday as we headed into the weekend with no doubt an active harvest weekend in the U.S. And, of course, plenty of news headlines around the world having an impact. Cattle found a little bit of strength, hogs a little bit lower as well. A lot of the talk of the day Friday was with a strong jobs report and some of the impacts on the dollar and equities, et cetera, et cetera. We're going to talk about things and get a good recap of the week in the trade. Joining us for a conversation, Kent Beadle with Paradigm Futures is back with us here on Market Talk. And Kent, always good to talk with you. Welcome back to the show. Hope you're doing well.
Doing well, Jesse. Thanks for having me today.
Man, oh man, what a week in the market trade. I know in terms of just the broader market picture, you got everything from a dock worker strike that seemingly has been resolved to the escalations in the Middle East. Weather is top of mind. Harvest rolling along in the U.S. I guess, no shortage of news items to talk about, Kent, in terms of these markets.
No, and I add to that, we had a stocks report on Monday as well. And so, all of those things have kind of added to a somewhat choppy market. We had a great start to the week. Ultimately, we rallied off of the stocks report in corn, which not surprising that we might do that. We were 92 million bushels below trade expectations. We've been essentially proving now for the last 7 or 8 months that these low prices are buying demand for U.S. commodities and especially U.S. corn. And, we proved that again, in the stocks report on Monday. Since that time, the corn market saw another strong weekly ethanol grind. We're hearing the potential of some additional Brazilian imports of U.S. ethanol because of many things. Last year's not great corn harvest and now not very good sugarcane harvest that are both somewhat depleting some of the stocks for renewable fuels over there, which are blended at higher rates. We're still obviously watching weather in Brazil as well. Does look like it's going to rain here eventually, but and then you mentioned the dock workers strike. Really good news that got solved. We send a lot of containerized soybeans, non-GMO beans, and other specialty crops via container around the world. In addition to that, a fair amount of frozen pork and frozen beef. Not having that back up into the cold storage system is certainly a good thing. And then you mentioned the war, and of course we've had one of the strongest weeks in over a year in energy prices. Those things support renewable fuels. As margins expand with a little bit higher energy prices. Not that energy prices are anywhere near their highs, but they've rebounded quite nicely. And, honestly, the situation in the Middle East does not look like something that's going to get resolved anytime soon. And in fact, the amount of escalation that we might see is significant. And of course, we did hear that the Houthis have made themselves known again this week and have said that they are going to, regroup and once again start trying to restrict traffic through the Red Sea.
I think about the Middle East and the impact of the spike in crude oil here as well. And it's felt like to me, and I'll let you talk about this, that maybe fund managers have moved a lot of money potentially to the sidelines, maybe putting a little hedging into oil, but also then, taking some money out of the grains and reeling in some of their short positions, things like that. It just feels like a lot of nervousness with some of those issues, especially as we go through a weekend where headlines can change rapidly.
No, I think that's true. felt as though coming out of COVID and the supply chain issues that we might have a more significant sort of inward flow of commodity money into things like index funds and the like. Really never saw that develop. One of the things I guess I just feel and have felt here now for really the entire post-COVID period that we're in is the uncertainty of how this new time is going to play out with a lot of different sorts of economic indicators out there. When we think about removing or shifting supply chains more into the U.S., when we start thinking about the problems of demographics in the world and the challenges of less people, and we think about that in China very specifically because they're big buyers of our grains, but we also have to think about that in Europe and in other Western countries, maybe less so in the U.S. And of course, it's very interesting that the reason that we have less worry about that in the U.S. is because of the immigration, both legal and illegal, that we've had in this country, and it's in some respects it's supporting our economy and it's supporting our demographics much more than a lot of other countries, and so it's a real volatile time in world marketplace, and there's so many changes. It's very hard, I think, for managed money to make a large bet on which direction things are going to go right now.
I think about this as well, and you talked about how we kind of rallied off the stocks report from Monday, especially in corn, and then kind of petered out, I would say, as we went through the week. And I know that I was looking at some of the charts. We got through some key 100-day moving averages initially on the rally, but we didn't really expand much past that in any of the grains, for that matter, it felt like. And I just have to wonder, Kent, did some farmers selling come into play here, maybe help cap some of that rally in the grain sector?
Well, it's absolutely it has, and I mean, goodness, it's October 4th, and we're rapidly starting to move into the gut slot of the first half of this harvest. We have had remarkable harvest weather for the better part of, well, ever since the crop has gotten ripe. We just haven't had rainfall in any part of the U.S. That's obviously another story for another time. We're not growing a crop yet, but the drought monitor is expanding rapidly here in the U.S. But we're going to have a fast harvest, and we've had a rally at the highs for soybeans. They were $1.10 off the harvest lows, and the corn rally had pushed to I think not quite, just almost 60 cents off of its harvest lows. No, 50 cents off its harvest lows. My apologies. But in any case, the combination of being in gut slot harvest and that kind of a rally has made it quite a bit easier for the farmer to sell some bushels that, whether he was behind in his marketing or he just knows that because of yields and space, he's going to have to get something sold. It just made it a lot more tolerable to make the decision to make some of those sales.
Well, thinking about this here, if some folks didn't really ramp up their sales and risk management here this past week, still maybe an opportunity here in terms of working through the gut slot of harvest. Talk about some thoughts you might have risk management wise. One of the prevailing themes that I've had with folks here lately is don't bury your head in the sand. We know prices haven't been that great, but this has been a rally that's maybe been a spot to potentially reward, I guess, is what I would say. So from a risk management standpoint, what are your thoughts right now, Ken?
So with my client base, we did have a recommendation out. We had set some objectives in last weekend's newsletter, and actually rather quickly ran up and filled that first objective that I had in corn. It was against the fib retracement, the 38% retracement, and the 100-day moving average. And so we let a little December corn go at 427, or conversely, a little bit of July corn go at 460, depending on whether or not the grower had space. We believe that we will have opportunities to sell additional bushels, and probably at prices higher than that sale. But if you take a look at the price action in corn here over the last month and a half, we rallied off of harvest lows by 31 cents, and then we spent over 2 weeks just moving sideways. From that sideways base, we rallied another 33 cents off the lows from just over a week and a half ago, to make our highs here this past Wednesday. And it just wouldn't surprise me if we were to trade a sideways trading range for another couple of weeks, and maybe sideways lower. But I do think there are a couple of things that are important. First of all, we are still at a price that is buying demand from the world end consumer. We have increased our livestock prices to where livestock feed conversions are reasonably profitable through most of the protein chains. We have been ratcheting up our export programs. Brazilian corn basis, for example, is at least 80 cents a bushel higher than it was at this time last year. And we are very competitive in corn through much of Asia right now. We're seeing strong ethanol demand, both domestically as well as for export. And if you're in a world end user, you have to look at these prices and say, hey, these prices are still actually below the USDA forecast for cost of production to the U.S. farmer. And essentially what that says is the marketplace has put corn on sale to this world end user, and that's not something that can sustain itself over a long period. It happens sometimes for short periods of time. But, the old adage is low prices cure low prices, and it does it two ways. One is to encourage demand, and we're seeing that happen right now. That is why this past year's ending stocks level ended up being over 400 million bushels less than what it was projected to be last March and April. But the other thing that low prices do is it discourages supply. And the way it's going to do that is, with the acreage number here this upcoming spring, if we have not rebounded our corn production to something that is at least at or maybe a little bit above cost of production, given a couple of years of tough economics for farm production, the banking system will be less inclined to provide dollars, to produce an acre of corn. And I believe that's going to have an impact on acreage if we don't have some further price appreciation. Now, some of that is going to be up to the market and whether or not, the safrinha corn crop in Brazil can get planted on time, or whether or not that drought extends itself. There are a lot of those issues that are going to ultimately determine if we rally and by how much. But if we don't, the second leg of the low prices cure low prices will kick in with less corn acres next year.
With that thought in mind, let me ask you, I look at, I'm rounding here slightly. D's 25 corn is like that 450 mark on the board. Yeah. November 25 beans around 1080, with some potential challenges in South America being talked about, things like that. Farmers are starting to pencil out some input costs and more for next year, should we
Mhm.
think about starting on some of our 25 marketing, Kent?
Oh, of course we should, and we need to look at some realistic objectives. Um, you know, I certainly think that the realistic objective that a person starts with has at least some bearing on what it's going to cost that grower to to break even or to make a return on the dollars of cost plus labor that he's going to invest in that crop. So know what that number is, and then start having targets out there. But I'm not sure that I'm in the camp that a person should start making sales at levels that are below cost of production for that grower, just in order to say that you have something on the books. Okay. There's an awful lot of uncertainty from a weather standpoint, and there is every year. And this was a year, as we look backwards, where we never really got a weather rally that allowed us to make a marketing decision that made economic sense for an operation. Okay, in hindsight, with the kinds of yields that we had in some parts of the Corn Belt, the marketing opportunity that came in May, for example, was a good opportunity to get something sold. And a lot of people did sell a little bit of grain in that period of time. But what you hear a lot of folks say is, "Oh, gee, the farmer was asleep at the wheel and didn't get stuff marketed." But the truth is that those opportunities were not there to market at levels that were going to pencil against a normal trend line type yield. And it's really easy in hindsight to say, well, gee, the crop was in pretty good shape. You should have sold some because of that. Well, I've been doing this for an awful long time, and it's very difficult to put a crop in the bin, let alone a bumper crop in the bin, when there are weather challenges. And we did have some weather challenges this past year that we managed to overcome. Although, as it's turning out, as yield reports come in, there has been more variability in yields than many folks thought that there would be. And some of that had to do with the fact that we still did, in fact, plant acres somewhat late in May and early June, and in some conditions that maybe weren't all that great. And so when we ended up with a very dry finish to the year, it turned out that some of those yields haven't penciled out to be nearly as good as many people thought they might have had in early August. And there's another point here. In the spring, we had a forecast for a La Nina to come this summer sometime. Didn't know when it was going to get here. Some of the models said it would get here in August or September, and some of them said it would get here in June or July. And we've seen what the result of this La Nina has brought to the Midwest, right? We haven't had, much in the way of measurable rain for a very long time. And we've seen a drought monitor go from having almost no drought in the U.S. to having almost continuous drought across the Corn Belt. Think if that La Nina would have hit 30 days earlier, what the impact would have been on our yields across the board. I think it would have been significant. And so when we look backwards, and when I hear some market analysts scold the American farmer for not selling all their crop with that kind of a forecast and the start that we had, that rankles me a little bit. I think I don't think the decision making has been all that bad. Now we've had a rebound, and obviously we need to take advantage of this rebound and start to get some grain marketed and use the tools in the toolbox that we have to try to do the best job that we can.
Absolutely. Great thoughts. As we close out today, I should touch on the livestock complex real fast with you as a whole. Cattle had a decent day Friday. Hogs a little lower. Any big notes for you across that protein sector here today, Kent?
Well, the cattle market has just, kind of had a really nice recovery from some lower values, and we've had a series of 2 or 3 corrections in the live cattle market that were probably necessary, but more than likely did nothing more than make the market healthy once again. And we've got a challenge with inventories. It's clear we didn't get an inventory report from the USDA in July, and I think we'd see the challenge we have in front of us if we would have gotten that inventory report. But it's showing up in the cash markets here. The hogs have been very resilient. They ended up closing a little bit lower today. But they're clearly a value protein right now, priced the way they are against beef. And it's clear that we're getting pork demand both here in the United States and in the export markets that's clearing some of this additional supply that we've had. And the market's just held up much, much better than many people thought that it would. And it looks like it may continue to do so.
Well, we appreciate the thoughts. I know folks can learn more and reach out online, find details, paradigmfutures.net. Kent Beadle, Paradigm Futures, good to talk with you, sir. Thanks for joining us on Market Talk today. We appreciate it.
I appreciate it, Jesse. Thanks. You guys all have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.